Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Bangko Sentral says 2 more rate cuts this year are still on the table as inflation stays under control. The Philippine government's outstanding debt has climbed to nearly 17 trillion pesos, fueled by fresh domestic borrowing. Headline inflation ticks up to 1.4% in June, still well below last year's levels. In the U.S., Congress passes President Trump's big, beautiful bill, a sweeping tax and spending package with massive fiscal implications. And later in the show, can customs deliver? Makati Business Club's APA Ongpin joins us live to talk smuggling, shakeups, and the 1.1 trillion peso challenge. Global markets rallied overnight with Wall Street hitting fresh record highs. Investors cheered a stronger than expected U.S. jobs report and chipped in more gains for tech giant Nvidia, now flirting with a $4 trillion valuation. The U.S. unemployment rate dropped to 4.1% in June, better than expected. Non-farm payrolls jumped by 150,000, well above the consensus forecast of 110,000. The data lifted market sentiment, even as traders braced for the Fed to stay on hold longer. Nvidia rose 1.3%, bringing its market cap to $3.89 trillion US dollars. Just a breath away from the 4 trillion club.
I think the market's hitting new all-time highs is something that is likely to continue, and that's not just my opinion, but rather history. If you go back to World War II, you realize how swiftly we went from a new all-time high on February 19th to a 10% correction. That was only 22 calendar days. Swift declines tend to imply shallow sell-offs and fairly rapid recoveries, which is exactly what we got. Also, history says that we tend to advance another 10% before being vulnerable to a decline of 5% or more. So I still think, at least in the near to intermediate term, meaning over the next several months, we still have upside potential.
The Dow Jones Industrial Average rose by 0.8%. The S&P 500 higher by 0.8% as well, and the Nasdaq added 1%. European markets also closed higher, with London's FTSE higher by 0.6%. Germany's DAX up by 0.6 as well, and France's CAC 40 adding a little less, up by 0.2%. The Bangko Sentral ng Pilipinas signals it may cut interest rates 2 more times this year as inflation remains under control and economic growth still stays sluggish. The big picture, lower rates could bring relief to borrowers and stimulate spending, but they also signal growing concern over the strength of the economic recovery. BSP Governor Eli Remolona says there's room for 2 more rate cuts in 2025, with policy meetings still scheduled in August, October, and December. He says any move will remain data-dependent, balancing inflation risks with a need to support growth. Last month, BSP lowered the benchmark rate by 25 basis points to 5.25%, its first cut in over a year, amid a weak first quarter GDP print and a modest inflation outlook. The Department of Finance wants to slap taxes on online gambling and crack down on unchecked access to digital betting platforms. The bigger picture, a growing social risk. Filipinos, including young adults, are facing rising addiction to online gambling, and lawmakers are taking notice and sounding the alarm. Finance Secretary Ralph Recto says he's studying the limits on cash-ins and playing time and wants to require warning labels on gambling risks similar to that of cigarettes. He's also calling for a total ban on government officials participating in any form of gambling, online or offline. The Philippine government's debt load hits a new record, rising to 16.92 trillion pesos as of end May. That's up from 16.75 trillion in April and well above last year's level of 15.35 trillion. The Bureau of Treasury says the increase came from new domestic borrowing, a move that signals strong market appetite for government securities. A A stronger peso helped offset some of the risk by reducing the value of foreign debt in peso terms. Why does it matter? Well, rising debt puts pressure on interest rates, spending priorities, and credit ratings, and could limit the government's ability to respond to future economic shocks. Asia's most influential business leaders are gathering here in Manila, and the Philippines is making a play for strategic relevance. After more than a decade, the country is hosting the 14th Asian Business Summit, bringing together top executives from 12 economies to strengthen regional ties amid growing global fragmentation. In a courtesy call at Malacanang, President Marcos called for deeper multilateral cooperation to shore up economic stability and drive sustainable growth. He also unveiled new partnerships in clean energy and future-ready industries, which are aimed at attracting long-term investments and creating high-quality jobs for Filipinos. The summit is led by the Philippines-Japan Economic Cooperation Committee and Japan's Business Federation, as Manila and Tokyo position themselves as engines of resilience in Asia's next chapter. On another front, the Philippines and Canada are moving to deepen ties as President Marcos speaks with Canadian Prime Minister Mark Carney in a high-level call. The two leaders discuss expanding trade, investment, and security cooperation, with Carney inviting Marcos to visit Canada. The call also touched on regional stability as both countries push for a free and open Indo-Pacific and rules-based order. Marcos thanked Canada for its rapid response after the deadly tragedy at this year's Lapu-Lapu Day Festival in Vancouver. With nearly 1 million Filipinos living in Canada, both sides stressed the importance of cultural and people-to-people ties. Now we have some fresh data. Inflation edges up but remains well below target. June headline inflation came in at 1.4%, a touch above May, but far below last year's 3.7%. The pickup came mostly from housing and utilities, but overall, price pressures stayed muted. That keeps the door wide open for more rate cuts by the BSP as markets bet on easing to jumpstart growth in the second half. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Friday morning. Right now, the Nikkei 225 is flat with an upward bias. Hong Kong's Hang Seng Index higher by 0.6%. Shanghai's Composite flat with a downward bias. And Singapore's Straits Times Index higher by 0.5%. Here at home, Philippine shares extended their gains Thursday as investors positioned ahead of the June inflation print, which just dropped. Inflation edged up but stayed well below target, giving the BSP more room to ease, with markets now pricing in additional rate cuts to recharge growth in the second half. In any case, the PSE index climbed 0.8% yesterday to 64.69, its highest close since mid-May. Trading value also surged to 10.23 billion pesos, which is well above the June average of 6.5 billion pesos, signaling growth conviction in the rally. Over the near term, the market may test resistance around 6,500, with inflation and monetary signals setting the tone. Now, as of 10:13 this morning, the main gauge is trading to the downside, lower by 0.2% to 64.56. The raw all shares index lower by 0.3% to 37.93. As for the sub-indices, we're seeing a mixed picture. The holding firms, property services, and mining and oil counters are in the red, whereas the financials and industrial counters are bucking that downtrend. So far, total volume, we've got 91 million shares traded, valued at just under 1 billion pesos. Market breadth is negative. We've got 63 decliners, 56 stocks advancing, and 41 stocks unchanged. Checking on the currency markets, the peso opened weaker at 56.40 to the greenback, slipping from yesterday's close of 56.25. Now, the country's top corporate foundations are rewriting the rules on giving back, shifting from one-time donations to long-term impact investments in education, health, and financial access. On the final day of the 2025 CSR conference in Makati, business leaders warned if you promise innovation, you have to deliver access. Sujin Kim reports.
CSR in the Philippines is evolving, now digital, inclusive, and transparent. But modernization brings urgent reminders of persistent infrastructure gaps, limitations that stand in the way of equal development across communities. The call is for a more strategic approach to CSR, not just donations, but investments in education, healthcare, livelihoods, and opportunities. Under the League of Corporate Foundations, including Ayala, Metrobank, SM, Metro Pacific, Jollibee, Shell, and Cebuana Luwalier, digitalization was linked to one crucial foundation: access to power.
Because, if you have all of these services that rely on digital, we have many communities in the Philippines that don't even have power, much less technology. So I think a big part moving forward, as we do more digital solutions, we also have to make sure that access to digital products and access to being online and access to energy become a part of the solutions that we look at.
Each year, LCF member companies spend billions on CSR initiatives. The general benchmark:
The recommended is 1% of profits. Because different companies have different overheads.
Meanwhile, at Metrobank Foundation, the focus is on building a seamless education to employment pipeline, a direct path from school to work.
So we have an active push that when our scholars graduate from college, we also link up with not only Metrobank, but the bigger, group of Metrobank companies so that we can also provide employment opportunities for our scholars. So diretso na siya from education to employment.
Beyond scale, the foundation is now prioritizing lasting, measurable impact.
In the Metrobank Foundation, we continually try to refine our strategies and refine our targets so that we can ensure that whatever investment we make in corporate social responsibility, the impact is sure and that we are helping people, not just in terms of quantity, the amount of people's lives that we are able to touch, but more importantly, that our work, that our initiatives are truly life-changing.
Transparency and financial inclusion are also becoming core CSR goals. Microfinance provider Cebuana Luwalier plans to introduce blockchain technology to combat fraud, especially in microinsurance.
Infusing blockchain technology definitely will be able to make financial records more transparent, and therefore at least we can be able to obviate or even minimize, if not eliminate, distrust and enhance the integrity in our auditing processes.
Over 54 million Filipinos are covered by microinsurance, making transparency and security even more crucial.
If we can infuse blockchain technology, then we can be able to democratize access to financial records and prevent fraud as well. So I guess it is something that the industry should be able to adopt eventually.
In a rapidly digitalizing world, the message from CSR leaders is clear. If there's technology, there must be power. If there's innovation, there must be access. Sujin Kim, Bilyonaryo News Channel.
The Bureau of Customs has a new chief and a new mandate to collect a record 1.1 trillion pesos in 2026. But with imports still weak, tariffs lower, and business trust on the line, it's a high bar. Commissioner Ariel Nepomuceno is promising digital reforms and stronger enforcement. But the private sector is not just about collection, it's about credibility. Joining us now, Apa Ongpin, the Executive Director of the Makati Business Club, a leading voice on good governance and competitiveness. Hi, Apa. Thank you for joining us again.
Well, thanks for having me.
Okay, always good to hear from you. We've got so many topics to cover apart from this BOC, so let's get straight to it. Let's start with a headline figure, the BOC's fresh record 1.1 trillion revenue target for 2026. They don't just pull these numbers out of thin air. They're professionals. But in your opinion, do you think, this is a realistic goal or a bit of a fiscal stretch?
If they came up with a number, then they must think it's a realistic goal. So I would have to say, okay. you know, you're the guys who know what you can do. I'm going to consider this a realistic goal. I know it's a very high number. And there's a
Record.
lot of assumptions there, right?
Yeah.
That the economy is going to have to grow.
That's right. That's
People
right.
are therefore going to have to import more taxable goods.
Yeah, that's the next big question. How does customs get there? And what are the assumptions, the economic assumptions in place for us to hit 1.1 trillion?
Well, one of the sort of low-hanging fruits, in a sense, is to convert smuggling into government revenue. You know,
Yeah,
that's the obvious avenue. Now, you know, let's be frank. There is smuggling going on. A lot of it is in agricultural goods, huge volumes, and so on. And if customs was able to collect duties and taxes on those goods instead of, you know, getting the money as corruption revenue, that would really help meeting the target.
Yeah, touching on that, the top complaints of members of the Makati Business Club when it comes to the Bureau of Customs, of course, smuggling is right up there. But what are the other biggest concerns?
Well, you know, when we interface with the government, we don't like to just complain. Okay, we don't want to go up to the customs commissioner and the Secretary of Finance and so on and say, hey, you know, puro smuggling, fix it. No?
Yeah.
What we want to do is propose solutions. You know, we want to say, look, how can we support you guys, right, in this effort? And one of the things that we want to do is enable digitalization. Digitalization is a really good way of what do you call this? Well, it encourages transparency, which therefore makes corruption harder to execute, right? Simple thing, right? For decades, the business sector has been trying to get customs to simply publish a rate schedule. So if you're going to import X, the rate schedule on this is Y, right? They haven't done it, right? But if you have that kind of transparency, right, you're going to import this and the rate schedule is that, nako, it's very difficult to have some kind of corruption.
What about extortion? Is that still a problem that your members encounter?
Yeah, so the problem both with the BIR and the BOC. No, I actually personally have a live case with the ARTA against people in the Bureau of Customs who extorted.
What's the modus?
From my company at the time.
What's the modus, Appa? You know, we hear about a lot of things. People report on a lot of things. One of them is that they give a high figure.
Okay,
can you talk to us about
the
that?
assessments.
Yeah,
okay.
the assessments.
And this happens a lot to foreign companies operating in the Philippines. So when we talk with our embassy partners and so on and so forth, they're saying, "Oh man, this is really a problem." So let's say a company is making 100 million pesos EBITDA in a year. No, the customs people will come around and give them a plainly absurd assessment, like 500 million
in hopes for
tax
settlement.
assessment. Yeah, and they say, "Okay, let's negotiate," diba?
Okay.
And that's sort of the standard modus for extortion with the BIR. No?
Okay.
And you know, there are companies out there like the fuel companies. Grabe, they've been paying through the nose. No, these very very high assessments, and then they sue the government after, saying that, hey, this assessment is unfair. And we know that there's a few fuel companies out there in the big five or whatever who have tens of billions of pesos in tax refunds because nga of these ridiculous assessments. No? And the government is saying we don't have money to give you this tax refund. It's already been ruled in court.
Okay, what's the workaround moving forward? How will the push to go digital help eradicate these problems?
Well, it won't eradicate everything, but for many of the smaller importers, it will just make extortion and corruption much, much harder, right? In the case of, in the case of the fuel guys, if you could have automatic computation, then you wouldn't have these ridiculous assessments.
Absolutely. Still on the customs front, Marcos removed 6 top officials from the Bureau of Customs, including the former commissioner, appointing Ariel Nepomuceno to lead the agency. Talk to us about the reputation of this newly appointed official and where do you think that's going to take us?
We've discussed him in Makati Business Club, and quite a few members are familiar with him. Apparently,
he came from the private sector.
Came from the private sector. He has a very good reputation. Apparently, he's very bright. He's very up to technology, up to date with technology, and he has great integrity. So we have high hopes for this guy, Mr. Nepomuceno.
Yeah, high hopes for him because he's got a really high target. Speaking of that high target, if that 1.1 trillion peso target for 2026 isn't hit, what are the risks there? I mean, our debt load, it's already ballooned to nearly 17 trillion as of May. It's a big problem for the president and for the economic cluster. What are your thoughts about this, Apa?
Yeah, it varies whether they consider it a problem or not. During Pinoy, they considered that a problem. And Pinoy
looked to pay it down.
Moved to pay down a lot of debt, and in doing so, raised the company's credit rating a great deal, which made us a much more attractive destination for foreign direct investment. Okay, then during Duterte, the government was like, borrow, sige. So the debt went really, really high up. They were capitalizing, obviously, on the good credit rating.
Yeah,
that,
absolutely. They benefited from that.
And this government naman, they don't seem alarmed by the high debt level, but they are doing measures to make sure that we can pay this stuff down.
What do you think is a healthy attitude for national debt?
Well, that's a judgment call. I mean, obviously, as a businessman, businessmen like Pinoy's attitude, right?
Pare that down.
Let's handle it. Let's pay off as much as we can and improve our credit rating because it makes us a more attractive destination.
Great. Looking ahead, what are the key performance signals, KPIs, MBC and the business community are watching now, whether to see whether custom is truly reforming or just rebranding?
Well, it's a wait and see thing on our behalf. We are planning to engage with the government on this, precisely to discuss, how we can support and how we can have solutions to these problems. No? But this is a really age-old problem, and they need to have the revenue. They need to come up with this revenue.
Yeah, absolutely. BIR and customs are really the backbone of the government when it comes to revenue collection.
Yeah.
Okay, on another topic, June inflation hit 1.4%. This is below last year's 3.7%. Signals, possibly more rate cuts. The BSP says maybe even 2 more rate cuts. What does this say, this very tame inflation rate, especially after elections? Right?
Yeah.
What does this very tame inflation rate at 1.4% say about the government's economic cluster and how they're handling things?
I have to be, objectively, no. I think this is a excellent performance by the economic cluster. Inflation is particularly difficult to tame after an election because, all sorts of money enters the system, right?
A lot.
They did it. They were able to control the price of rice in particular. They were able to lower food prices in other sectors and basic goods. And this is a huge effort. This is not just,
It's not just lip service.
not
This
just
is
lip
action.
service.
Yeah.
It's action. And hats off to them.
Okay.
We really think this is the central job of these guys because inflation really hits the poor. And controlling inflation is much, much better than raising wages.
Yeah, and with all the global headwinds, right, it puts us in a better position to weather all of those storms. Speaking of those global headwinds, the Trump administration's big, beautiful bill, implications on capital flows, risk appetite, global interest rates, and of course the impact on the Philippines in terms of the peso, foreign direct inflows. What are your thoughts on how this might hit us?
Well, in the past, we've said that the whole tariff thing, the Trump tariff thing, doesn't really affect the Philippines as much because we're not manufacturing so much. We're a services economy. Of course, the Trump administration wants to tax BPOs, no?
And OFW remittances.
OFW remittances. So that will affect us a little bit, no? But it's not as bad as, let's say, China or Vietnam. Vietnam made a deal.
Yes, that's
because
right.
they're really dependent on manufacturing.
They've said it
right?
already at
That's-
20%.
Yeah.
Yeah.
That's their, that's their lifeblood is exporting goods to the U.S.
So for us, at 17%, which would be the worst case scenario? What impact do you think that's going to have on our economy?
Well, hard for me to speak as an economist, but
Just from your lens as the executive director of the Makati Business Club.
I think it will not have a catastrophic or major impact on our economy.
Good to hear.
And in any case, don't forget that the courts have ruled that Trump may not set tariffs.
Yeah.
He may not, because it is not an emergency situation as he describes. So he's going to have to get over that legal hurdle if he wants this thing to happen.
Yeah, and everybody's just looking for more clarity so that they can make decisions based on what's really going to happen. I guess just wait and see for us. On the last front, I wanted to ask you, the Department of Finance wants to slap taxes on online gambling, digital betting platforms. What are your thoughts on this?
There's already a flat tax on gambling. It's, I believe, 20%, no? That the government imposed from the very, very beginning. I don't know if the legislature would countenance more additional taxes on gambling. It's a sector that that brings a lot of revenue to the government already. But it's taxed very high. 20% is, it's, I mean, the winners pay 20%.
Okay. Another question. There's a call for a total ban on government officials participating in any form of online or offline gambling. How easy would this be to enforce? And beyond their participation, what about ownership of gambling or investing in gambling-oriented businesses? I mean, if they can't be seen in a casino, but they can own one, it's kind of sends a different message, right?
There is a ban. Okay, there's an existing ban that all government employees and officials are not allowed to gamble. Period. Right? Well, there are, I guess, some exceptions. They're allowed to buy sweepstakes tickets, lotto from the PCSO, whatever. But in public gambling establishments or something. It is no secret to many of us that a lot of gambling operations are owned by government officials, particularly LGU officials. No? And I'm talking about legal gambling. Legal gambling. So I'm not going to name names or anything like that.
We don't need to. Let's talk big picture. But what does this say about us and what needs to change on this front?
Well, I don't know about what needs to change, and it's not something that we've discussed at Makati Business Club. But we do recognize that gaming, as they like to call it, is a significant source of revenue for government. And, if they're going to change policy on that, good on them. We'll support it.
Okay, all right. Thank you so much for your time, Apa Ongpin, the Executive Director of the Makati Business Club. Okay, we're taking a short break, Business 360. We'll be right back. Welcome back. The government is moving to bring down healthcare costs. 19 more life-saving and maintenance drugs are now VAT exempt. BIR Chief Romeo Lumagi says this is part of a broader push to make treatment more affordable, especially for Filipinos battling high-cost diseases. The new list includes medicines for cancer, diabetes, hypertension, and mental illness, diseases that drive both poverty and public health costs. This VAT relief is backed by the Train and Create laws and based on recommendations from the Food and Drug Administration. The BIR is now monitoring pharmacies to ensure the benefits reach consumers and is urging the public to report overpricing or non-compliance. What's the big picture? Well, with out-of-pocket spending still making up half of healthcare costs in the Philippines, this move is a small but crucial step toward access to universal health. Now, on another front, the EDSA rehabilitation is officially pushed back to 2026 as the government scrambles to balance urban mobility and economic disruption. DPWH Secretary Manuel Bonoan says repairs will now start next year, delayed by the rainy season and the year-end travel rush. Work will be done mostly at night to minimize gridlock. The agency is looking to use a new overlay technology, one that adds a stable layer on existing lanes. That means EDSA will be raised slightly, but repairs could be faster and less invasive. On the transport side, the DOTR is beefing up bus capacity on the EDSA busway. Officials also plan to deploy 8 Dalian trains to MRT3 pending final clearance. Now, with EDSA still the spine of Metro Manila's economy, the real challenge isn't just fixing the road, but keeping commuters and commerce moving all throughout. Now, the SEMEPA law promises to boost investor confidence, but it's also shaking up the auto industry. Pickups, long exempt from excise tax, are losing that privilege. Prices could climb and car makers may be forced to go greener faster. So what does this mean for Filipino consumers and the future of mobility? Here's G. Baroga with those details.
The newly signed Capital Markets Efficiency Promotion Act, or CEMEPA, is being hailed as a step forward in getting more Filipinos to invest in local capital markets. But buried in the fine print is a provision that hits closer to home in the garage. CEMEPA officially ends the tax exemption on pickup trucks. That exemption was first introduced under the train law during the Duterte administration to help small businesses afford vehicles for goods, tools, and deliveries. But times have changed. According to the Finance Department, many buyers today are not business owners and use pickup trucks for personal mobility. So the government says the exemption no longer makes sense. Ulysses Ang, editor-in-chief of CarGuide.ph, says automakers are now reassessing their strategies.
It's still too early to say what the effect of CEMEPA has with the commercial vehicle segment. But as you mentioned, it is one of the growth drivers of the industry. We'll have to wait for a couple of months to see if sales have gone up, remain stable, or will go down.
As of May, pickups and other commercial vehicles still led the market with over 151,000 units sold. But with the new taxes looming, car brands could shift focus, especially toward hybrids and electric vehicles.
We're looking at it from last year. Electrified vehicles made up less than 5% of the market. So now if it's going to be new car sales jumping up to almost 10, and you can see that even car manufacturers are looking at that to replace probably the sales lost from pickup trucks.
With more models available and incentives still in place, now may be the best time to go electric. Still, many Filipinos are worried about charging. But Ang says the bigger hurdle is not infrastructure, but the mindset.
Electric vehicles, all you need to do is charge it in your home, just like you would your cell phone, and you would have enough range to carry out your daily driving duties.
He adds that setting up charging stations isn't as complex as people assume. They just need to make sure that the electrical grid can sustain the chargers, and also they don't need to be too far apart. Ang also reminds buyers that some EV perks are not here to stay.
As the DOE pointed out, the exemption of, say, things like number coding, it's not forever. They mentioned that they're extending it to 2028 or 2030, so if you want to maximize those benefits, now's the time.
As for those still considering pickups, especially for business use, there's still a small window to buy at the old prices. As long as the unit is cleared with customs, already in the dealerships or off for delivery, the old tax-free status still applies. For BNC Mobility, G. Baroga.
Welcome back. Philippine Airlines is betting big on trans-Pacific travel, adding more flights to Seattle starting November 25. The flag carrier will expand service from 3 to 5 times a week, catering to strong demand from Filipinos in the United States, West Coast, and business travelers alike. It's part of PAL's push to strengthen North America as a growth corridor with direct routes to New York, LA, San Francisco, Honolulu, Guam, and now a beefier Seattle schedule. With the clock ticking on a crucial tariff deadline, Washington and Manila are racing to strike a deal. U.S. Ambassador Mary Kay Carlson says both countries are working hard to avoid a trade disruption as the July 9 deadline looms on the suspension of reciprocal tariffs. Right now, Philippine exports enjoy a 10% rate into the United States, but if no agreement is reached, that could jump to 17% next week. Manila is pushing for an extension, hoping to buy time for a longer-term trade framework.
I am confident that both sides are working very hard to reach an agreement. And I recall when I was about 15 years ago, what an ambassador I was working for said in the context of trade negotiations going at the time, you know, if you don't have trade disputes and negotiations, you don't have trade. So in that sense, I know trade is an ever-evolving issue, and we will continue to work together as friends, partners, and allies, and partners particularly in prosperity with regard to our mutually beneficial trade.
A pillar of Philippine industry and diplomacy passes away. Steel magnate and former ambassador Francisco Benedictto has died at the age of 85. Benedictto was more than a businessman. He was a bridge builder. He led one of the country's largest steel firms, then served as Philippine ambassador to China and Singapore, strengthening economic ties and advancing regional cooperation. The Federation of Filipino-Chinese Chambers of Commerce remembers him as a leader who used influence for the greater good in trade, diplomacy, and public welfare. He received the award for promoting Philippine-China understanding, a testament to his commitment to peace and progress. His wake is being held at the Our Lady of China Sanctuary in Binondo, with daily services until July 9. Now, on another front, Donald Trump's big, beautiful bill just cleared a major hurdle as the U.S. House passes his sweeping tax and spending package by just 4 votes. The bill makes his 2017 tax cuts permanent, adds new brakes he promised in the 2024 campaign, slashes green energy initiatives, and funds a tougher immigration crackdown. But it also adds $3.4 trillion to America's already $36.2 trillion debt, raising fresh questions about fiscal sustainability and U.S. credit ratings. Trump calls it big and beautiful, but for global markets, including the Philippines, it signals a new wave of policy volatility, capital reallocation, and macro risks ahead of the 2025 Fed decisions.
I would sum it up with one word. It's belief. Okay, we had a vision for what we wanted to do as a group. We believed in the election cycle last fall that we were going to be given this great blessing of unified government, that we would have the White House and the Senate and the House aligned, an alignment, unified government.
Trump says he'll sign that bill into law soon on the 4th of July at the White House. Now, elsewhere in the world, Peru's president is sparking fury and global headlines after moving to double her own salary despite high poverty levels. President Dina Boluarte now earns $10,000 a month, a pay hike her cabinet approved immediately. The justification? She was one of Latin America's lowest paid leaders. But with nearly 30% of Peruvians still living in poverty, the move is fanning public anger and political risk. For global investors, this is a reminder that governance pressures in emerging markets can shift fast and shake confidence in fiscal priorities. Now, elsewhere, trash is piling up in Philadelphia as major city workers strike disrupts basic services. Thousands of workers from District Council 33, including 911 dispatchers, sanitation crews, and water department staff, are demanding better pay and benefits. The strike has forced public pool closures and cut back hours at recreation centers. Negotiations with the city have stalled, and no new talks are scheduled. For global investors, it's a snapshot of growing U.S. labor pressure and public sector strain that could resurface in other major cities.
This city is very proud to be blue collar and hardworking and trade and all that type of pro-union. So the people of Philadelphia, if it sucks if this is what we have to do, but if this is how we got to support, us, this is, what we got to do.
Here in Asia, Japan's tourism boom is taking an unexpected hit, triggered not by a natural disaster, but by a viral comic book. A decade-old manga called Tokyo Magnitude 8.6 is making rounds online, sparking travel cancellations over a supposed earthquake prophecy for July. The artist says it's fiction, and experts confirm there's still no technology that can predict earthquakes. But the rumor is already impacting summer bookings and shaking confidence in Japan's tourism-led recovery. For global business, this is a wake-up call. Online misinformation can move markets, alter consumer behavior, and derail travel demand even in a top economy.
It's just a rumor, it's not a fact. And then Tokyo is known for earthquake, and we live in San Francisco, it's also earthquake. So we're like, no one can predict earthquake. I mean, I don't believe in the rumors, so that's why we're like, that's not going to affecting us. We're not going to cancel the flight. That's just a rumor.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel. And have a good weekend.